Welcome to the Daily Update, where I'll go over the action in the market for Friday, September 8th, and then we'll see how things are looking for Monday, September 11th. We're kind of back to a mixed picture right now. There's some positive things we can lean on. There's some negative things. We had been positive earlier in the week, and then we started to switch back to a more negative stance. Well, in Friday's session, things kind of came back together to put us in this situation where the market's not really sure what it wants to do right now. So I'll go through some of the different evidence to show you that, and we'll try to reach some kind of a conclusion. Also, on Monday, starting September 11th at 12 to 1 p.m. Eastern Time, I will be conducting a 1-hour class that will also continue on Tuesday and Wednesday. In the first session, I'll be covering my approach to technical analysis and a little bit about my own background and the program that I offer as well. Then in the second hour on Tuesday, I'll be going through some different strategies. When I did this class last week, I went a little long in that area, so I may have to carry some of that over into Wednesday's session, where the main topic will be support and resistance, and then any finishing up with a strategy section that I didn't get to cover. This will be conducted on Zoom, and on Monday, I will be putting a link in the YouTube community tab on my YouTube channel. And so you can just click on that and decide to join the session. It will be recorded in case you're not able to make it. So if you want to rewatch it, or maybe you didn't hear something while the session was actually going on and you want to go back and check that out. Okay, let's go back and talk about what happened. At the open, we had a higher open. The futures were looking pretty good. It looked like, all right, maybe we're going to get a bit of a bounce here. And it looked that way right after the open. We rose up to R1 and went above that at 44.62. But then we hit resistance and we ended up hitting the intraday high right at the open when we went up to R2 at 44.74. As the day went on, we fell back down to R1 and then we chopped sideways after that. You've got a real indecisive market. We declined down to the unchanged level, which acted as a little bit of support, and then we ended up closing slightly positive. We were up 0.14%, nothing all that momentous, and volume is continuing to be back above average now, so we're seeing that picking up, although it did drop off in Friday's session. The technicals are back to more mixed right now. You could take an approach to either side, either positive or negative. The big thing is that we're not trending right now. It's about inflation, interest rates, growth concerns, what is the Fed going to say, and just different economic things that are happening now as we're deciding, is the economy stronger than expected, and is the Fed going to have to raise rates, or are we seeing economic weakness? Some comments. The 50-period simple moving averages are acting as resistance, specifically for the S&P. Oil continues to rise. Now, as I've stated before, oil and stocks can go up at the same time. It's just when it gets kind of out of hand and based around the information coming out of Saudi Arabia and Russia, that's producing a little bit of fear in the markets right now. So with oil going up, that's more inflationary. And so when it does start to go up, that tends to limit stocks. The current scenario that we're dealing with, the economy is stronger than expected. Well, then we switched over to weaker than expected. And so that was bad news is good news. Now we're kind of drifting back into this. Any kind of economic strength could be bad news for the economy, because that means that the Fed will keep rates higher for longer and possibly even raise rates. There's still economic weakness in China, and that will go on for a while now. That's producing concern because a lot of S&P 500 companies do business in China. And then as oil continues to rise, especially when it really starts to go up, that produces inflation concerns. The dollar was up, and that's also putting some headwinds on stocks right now. It got back above the 105 level, and interest rates were down slightly on the 10-year. The yield curves that we follow are still inverted. Sentiment is positive. It fell a little bit to 51 where it had been at 53. Our trend, we're they're coming right back on top of each other now. The green line had been above, and then after Thursday, the red line came right back up to the green line, and it looked like we were turning slightly positive. Now we're right back to not looking all that convicted at this point. But we do know that the ADX is below its moving average and it's below 20. So overall, we're not trending. I'm keeping our bias at negative right now. I could have switched that over to positive, but it was just a barely up day, and I'm keeping our momentum at negative for right now. The economic reports that came out, not real influential in what we received. We had wholesale inventories down 0.2%, more than the down 0.1% they had expected. Last time it came in down 0.7%. Consumer credit came in, it was up 10.4 billion. Yeah, that's up, but it was less than the 15.8 billion they had expected. Last time it came in being up 14 billion. Here's a look at the wholesale inventories, where they are declining, even though it is improving based on the report that we had last time. And here's consumer credit, where, yeah, it's going up, but it's going up at a slower rate when you compare that year over year. And you have a lot of the stimulus money that may be gone by now that people were using. And you do have folks that are having to go into debt just to get by on a monthly basis, but it's not really affecting the year over year change, at least right now. Here's where we saw the decline on the month change, where it did decrease. And then looking at some Isabel Net blog charts, I haven't been going through those as much lately, and I'll probably continue to just kind of cherry pick those charts that seem to be telling us something. The dark blue line here is the S&P 500, and how we're pretty much staying flat right now, where we're seeing higher revisions in other countries, but the fact that this isn't rolling over for the S&P tends to be stronger. And then looking at the 5% pullbacks, they occur more than 3 times a year on average, and we've been falling back down to about that level now. So it's nothing necessarily strange that is happening. Of course, if you got in at the top where we were going up, you really felt a lot more pain right now. And yeah, there's a point where we have to get a little bit more nervous about what's happening. Even though we did switch more negative after Thursday, now we're kind of back to mixed. And we just kind of take this on a day in and day out basis just to analyze where we're at and then make decisions based on what we see happening. We did get the latest reading from the active asset managers, where it declined slightly down to 49.73. And then the top mega caps as a percent of the S&P, this is what they talk about when Apple, Google, Microsoft, the big names, and I have to clear my throat, when they are really having most of the influence on the indexes. So if you own anything outside of that, of course, I deal with the S&P, so it's a little bit different. But stocks that aren't part of the really big companies, you might not be having that great of a year. Where indexes like the NASDAQ 100 and the S&P, which are heavily laden with the big companies, they tend to be performing better. And then oil, since we've been talking about that lately, people are chasing this now. They're seeing oil starting to go back up, and they're starting to get back in to more positions. And then looking at the non-farm payrolls, which we had a week ago, and then comparing it with the ISM manufacturing, which we also received recently, where the dark blue line is the ISM manufacturing, and it's below 50, showing contraction, and it's not really showing that much of an improvement yet. And when we compare that to jobs that are being created, the jobs are still pretty strong, where the ISM manufacturing is kind of weak, where they tend to not get that far apart from each other. So what's going to give in this equation? Are we going to see an improvement of the manufacturing, or are we going to see a decrease in jobs? And then also looking at ISM manufacturing, and then the new orders, where the purple line is showing a real improvement there. And maybe this will lead the black line, which is the ISM. Maybe that will start to go up higher, where the purple line is just barely above 50. So it's showing a little bit of expansion, and we'll see if the black line can eventually get back up to 50. That would be more positive economically. And then September tends to be a pretty bad month overall. Here's the shaded area. that we look at here, just suggesting that there is some weakness going forward from here. And this goes from 1950 up to 2022. Now, looking at the intraday chart where we didn't have that much of a gap either up or down, but it ended up going positive, we immediately shot up to R1. We got up to R2. That was the overhead resistance, and that was the high for the day. We drifted lower down to R1 again and just kind of chopped along that level. Eventually, we fell back down to the unchanged level. That didn't really provide much support, but we didn't break below that either. And then we saw a little bit of buying going into the close. Looking at large cap growth versus value, where growth is still outperforming value intraday. And then we're seeing a little bit of an improvement with the growth to value ratio for the S&P. It was down, nothing gangbuster. It had been really looking a lot better. Well, we gave a lot of that back during the week. Well, we came right back up to the unchanged level, and that's kind of producing a little bit more of this mixed environment. Then looking at the growth to value ratio, where it did decline on a closing basis, we're still in an uptrend, but we've been chopping sideways now since about early spring. And then the ulcer index, it's turning back up just slightly where it had really been declining. This is another fear gauge, and it's calculated in a completely different way. So sometimes it doesn't necessarily line right up with the VIX and other fear gauges that we look at. Looking at the VIX, here's the average from 1990 up to 2022. That's the blue line, and we're wondering, is it going to continue to go up in real life this year, where the average has been that we usually decline going to, the middle to latter part of October? That would be more negative for the market. And then looking at the VIX, where we turned down a little bit with the line chart and the bar chart, volatility is also dropping off. It was a pretty sleepy day. And then looking at this, we're seeing it's really undecided as to what it wants to do here with the 5-period simple moving average of the equity put call ratio. Sorry for the pause. I have a naughty cat that is wanting some attention, and I'm wondering if I'm going to have to stop recording or what. I'm going to try to pause this and see what happens. Okay, hopefully that took care of the situation, but you may hear some kitty talking in the background as he voices his disapproval for being removed. But looking at this chart, we're chopping around a little bit. We're going back up slightly, which could be kind of negative. We want this to really decline. And you can see how we're bouncing around right now. It's not necessarily uncommon to see that. It's just the real strong trend that we had been seeing is not really apparent right now. And then looking at the VIX to VVIX ratio, this is also turning down ever so slightly. That could be positive as the VIX had been dropping. And then the longer term equity put call ratio just starting to flatten out a little bit. It's probably really hard to see, but we want to see this turn down as well and continue to decline for things to be positive. Looking at our advanced decline line, we declined a little bit based on price. We turned up just a little bit based on volume. Again, showing the real mixed environment that we're in right now. Looking at the new highs, new lows, we saw a little bit of an expansion of the new highs, also a little bit of an expansion of the new lows. Our 5-period is coming right back down to the moving average, and our 10-period is pretty much flattening out. Then the advanced decline ratio, where the blue line had dropped a little bit below 0, it's still below that, but the red line is still a little bit above, again, suggesting a real mixed environment. This was a little bit of a concern here. We're still not above the moving average with our accumulation distribution. So this actually turned down, and we wanted to see some more positive action in that. We're not seeing it yet. The Chaikin money flow, also, it still continues to be negative, but this indicator is starting to show some improvement. The NYSE advanced decline line ticked up just slightly, and then our regular advanced decline line is still above this upward sloping trend line. But on this other measure, also of the NYSE advanced decline line, but calculated in a different way, we're below this upward sloping trend line. Again, more of a mixed environment. Our advanced decline line studies, we flattened out with the NYSE. We turned up just slightly with the S&P, pretty much flat with the mid caps, and we continue to show weakness with the small caps. Our ratio between risk on and risk off is continuing to show some more declines right now, where it looked like it had been improving. And here's our trend where you can see the green line and the red line, they're just like, it's like a ping pong match as they go above and below each other here. But the ADX is declining and it's also below its moving average. Both of them are below 20. So intermediate term, we're not trending. Also in the short term, we're not trending and seeing a lot of the same basic price action. This is one area that's an improvement, but the Erin indicator, which tries to measure the strength of buyers and the strength of sellers, it crossed back above, the green line did, and that's turning our oscillator positive. But this can lag a little bit sometimes and not necessarily give us a real realistic picture of what's going on. But the fact that this did turn more positive is encouraging. And then looking at the daily chart where the 50-period moving average and this pivot level are providing overhead resistance. That's where we stopped in Friday's session, and we're going to really need something to get us through that. Now, in the upcoming week, we don't have any economic reports according to the calendar that I look at. There's none coming out on Monday or Tuesday, so the market's not going to really be able to key off of that. So what's going to drive things? Probably the things that have already been driving it, which is making it hard for some folks to make decisions. And then we drop down to below average here with volume where we had been picking up slightly. Looking at our stochastics, we're declining in the short term and intermediate term and starting to turn over in the longer term. The force index continues to be negative. And looking at our 20-period double and triple exponential moving average study, we're right on top of both of these. And the green line and the blue line are pretty much on top of each other. Looking at our 50-period double and triple exponential moving average study, we're still below the red line. And we need to get back above this for things to turn more positive and then eventually see the red line cross above the blue line, but we're not there yet. The go, no-go system is still giving us a deep purple, smoke on the water look here. That's negative. The highest high, lowest low values, we're right back at the midpoint now. Again, suggesting things are mixed. The TTM squeeze, though, is still continuing to show some improvement. It like that move up that we saw earlier on, and it hasn't really picked up this decline that we've been seeing over this week. And then the balance of power still above the dashed line, even though it did decline, it's getting close to that mixed point as well. The bullish percent index did decline, so that's a little bit more negative, but on the positive side, we're still above 50. The RSI based on 14 periods, just right at about the 50 level, turning back up and about at the 50 level with our shorter period RSI. The summation index based on price is starting to fall, but it's still above zero, where based on volume, it's also going down, but below zero. The NYSE summation index based on price, ticking down both based on price and volume. The mass index, still wondering if this generated some kind of a signal. We're not really seeing any kind of convicted move either up or down right now, so we're not sure if this is going to be a valid signal or not. The PMO, after showing some improvement, is now rolling back over. We're also rolling over a bit based on price and volume. We're still positive down below, but we're turning more negative with the PMO itself. In the PMO study, we turned up a little bit with the PMOs that are rising, declining with the buy signals, and declining with the PMOs that are above zero. Looking at the Swenlin trading oscillator, also showing a little bit more the negative side of things, where we're dropping below zero based on price and volume. The NYSE bullish percent index, after getting a little bit above 50, has now dropped below 50. But when we look at the NASDAQ 100 bullish percent index, we're above 50 and showing a little bit of an improvement. We're still inside the Ichimoku cloud. We're wondering, are we going to break to the upside or eventually fall down through the bottom of the cloud? Here's our oscillators, where the short term, at least the slope, which tends to be the fastest moving oscillator, it's still tending to go higher, where the TRIX is starting to roll over. In the intermediate term, because these didn't get a chance to stay as positive for as long, we're rolling over with the MACD, the PMO, and the PPO, where we're flattening out and still looking okay for right now with the TRIX and the KST. 20-period moving average study, also suggesting we're mixed right now. We're right in between the simple and exponential 20-period moving average. We're also right in between the 50-period exponential and simple moving average. And then we're just about at the midpoint right now with our standard deviations chart. And we're just about at the midpoint again with our moving average study of the open, high, low, close. The Bollinger Bands also coming back down pretty much to the midpoint. And the ease of movement, though, still has more of a positive stance. It's above zero and advancing. Where the parabolic SAR has another day now with the dots on top, that is negative. And we're not really deciding anything as far as our different trend lines right now. The MACD on the weekly chart is turning more negative. And the Dow is right in between the 50 and 200-day moving average. We're still below the pivot level, which would also be the 50-period moving average. That may provide overhead resistance if we go up. If we fall, we'll be wondering, will this S level or the 200-day moving average provide support? The diamonds, after having been negative, has switched back to neutral. And this is a little bit more positive. We're still right back down to this previous high, this red line that you see on the chart, which is about the 50-period moving average. We tried to break out above that, but then came back down as the day went on. The Qs have switched from being negative back over to neutral. And the NASDAQ 100, the PPO, the momentum oscillator that we've been following, it's still positive, but starting to roll over. The NASDAQ also dealing with its 50-day moving average, this pivot point as well, acting as resistance. And we closed just a little bit below that. And we dropped below the 61.8% retracement level, and we've not been able to get back above that, at least yet. The FANG index, though, this is more positive. We're still hanging out above the 50-period moving average. The small caps are where we're seeing a little bit more weakness, where they fell below their 50, 200. Now we're coming down to the support level and really turning more negative, but we're still working off of a recent golden cross. The dollar, which was able to get back above the 105 level, and that's also pressuring stocks. Then the Russell 2000 index, we're seeing more weakness with the RSI. We're coming down still based on price. We're below the 50-period moving average, but still above the 200-period moving average. But the MACD is also starting to roll over negative. The mid caps also not really doing much right now, in between both moving averages, in between this pivot level and the S1 level. We're seeing a little more weakness here, where the Dow is holding up a little bit better, but the transports are starting to show some weakness. And then, to make it even a little more complicated, we saw a pretty decent bounce out of the utilities. But when we look at the transports S&P 500 ratio, this is continuing to decline. That would be more the negative side. When we look at the Dow to transports ratio, the Dow is now back to outperforming the transports. That's more negative as well. We did see little change in the 10-year yield, but it ticked down slightly. And then looking at Tom Bowley's research, we are in a weak month. September tends to not be very good, where real estate is weak and industrials tend to do better. And we're pretty much in the middle right now, where if we're going to see some kind of a bounce, based on his research, we should be coming into that right about now, but then we might see some weakness towards the latter part of September. So what's our outlook for Monday? Still dealing with earnings reports as they're released. The technicals, I'm just saying they're mixed right now. You can make a case for either side, and it's easier to say that because we're not trending right now. Where the economic reports, well, we won't be getting any in Monday's session, so this should have been changed, but wasn't. And then the geopolitical events that we're watching, it's about inflation, interest rates, growth concerns. What's the Fed going to say? What's oil doing? What about the dollar? Don't have that on the list, but that's been providing some real resistance lately. Here's the new calendar for the upcoming week, where according to what I see, no reports for Monday and Tuesday. Then we're going to get the biggie on Wednesday with CPI. Then we'll get the PPI on Thursday. And then we're going to have a whole slew of information coming out on Friday. Looking at the Stock Traders Almanac statistics, where we're neutral to positive with the Dow and NASDAQ, where we're looking more positive with the S&P. We will be on the 7th trading day of the month, where we're following the green dashed line, where that tends to be positive during a pre-election year. Then with the NASDAQ, we're wondering, okay, are we going to start to see some weakness now as we come into the middle part of September? And then looking at the S&P during pre-election years, which sometimes we see a little bit of a bump up here, Or are we going to start to see some weakness going into the latter part of September? And then I keep saying I'm not going to show this, and then I show it. We're only up 33.33% of the time going back to 1950 when we measure pre-election years in September. So our scenario is not going with the down one right now because we're not trending, not going with the up one for the same reason that we're not trending. So if anything, we're leaning more towards the sideways trend right now because both of the ADX charts that we look at are below 20. They're below their moving average. We don't really default to anything right now because we can't really tell if the green line or the red line's on top for the time being. So our warning signs, those longer term charts, and I'll cover these in the weekly video, they may be signaling that we're at a top. We're still below both of those trend lines. We're in a seasonally and historically weak part of the month, but sometimes we might get a little bit of boost at periods throughout the month of September. The equity put call ratio is turning back up. The longer term put call ratio is also turning up. We're still in a risk on posture, but we're showing some weakness. The cumulative new highs, new lows for the NASDAQ are still showing weakness, but that's been going on now for quite a while. The 3-month yield is still above where we were at back in 2007, and it's rising a little bit. Sometimes it comes down. We're waiting to see if that's really going to roll over. The parabolic SAR chart has turned negative, and that's pretty influential in my opinion, and then dealing with earnings season. On the positive side, the seasonality and setups that I go over in the weekly video, those are still in the background. The daily special K chart is positive. The weekly chart continues to be negative. We're still above the downtrend channel upper line. The oscillators for the S&P are starting to show some weakness, especially in the intermediate term. And we're watching the NASDAQ 100, the PPO. It's still positive, but showing some weakness. The S&P is outperforming utilities. The Staples to S&P 500 ratio is declining, but that's not really giving any support to the market. The Russell and the small caps, as well as the mid caps, are working off of recent golden crosses. Small and mid cap growth has been chopping sideways, but is still positive. The financial sector getting hit pretty hard recently, but it's still working off of a recent golden cross. The Copic curve did generate a buy signal last week. So our conclusion, we're mixed right now and not trending. And we can say that in the short and intermediate term, where we're still positive in the long term because we're still dealing with the recent golden cross and we're above the 200-day simple moving average. Thank you. I hope you have a really nice weekend. I will be preparing the other videos like the weekly video, the intermarket analysis video, and the deep dive video, and I'll get those posted as soon as possible over the weekend.